Patrick, how are you?
I'm okay. How you doing, Jim?
Man, you look sharp today.
You're the one that looks sharp. I have a little less sharpness
Oh,
on the top.
well, I have absolutely none I've got 2 landing strips right here.
I think that's where I was headed when my wife that does my COVID cuts decided it was time to go for the big cut.
Yeah, I always told my wife my entire life that if it ever got to that point, I would just shave it all off. And so I did that once, and it scared her so badly that I decided I couldn't go that route.
I'll tell you what, until when we were getting married, she kept saying, "Hey, I'm going to shave off your beard. I'm going to shave off your beard." And on our honeymoon, I finally let her do it. Right. And then immediately she's like, "Let's shave your head. Let's shave your head." Now that my head's shaved, she won't let me shave the beard. So
Yeah, they do reserve that prerogative to change their mind, don't they?
absolutely.
Are you in the islands?
No, so my wife and I recently, I mean, I had been flying between Texas and Charlotte and Florida doing the red eyes so often that I was coming home and I was trying to do so many stops. It would be 4 to 7 day sprints, right, off the island. And eventually I just said, hey, I think it's better that we at least position closer on the mainland. And she does some contract work with feature-length animations with Disney and DreamWorks and Nickelodeon. So we moved to Newport Beach. That's where I'm at right now. She's got the ocean view now. I don't have the ocean view anymore. I've kind of got a little bit of the bay view. You can't really see it, but yeah, so I got demoted, but we're in Newport Beach out on the peninsula. It's beautiful. And it's easy for me, for some of the engineering stuff that I do here in Southern California, and for her as well. And then I've been hopping, of course, to the near states in the Southeast in Texas without having to do a 6-hour time change.
Yeah. How long were you guys in Hawaii?
Was it almost 2 years, year and a half, 2 years, something like that?
Yeah. And when did you make the change and come back to the mainland?
February. So we just got back. Yeah, we barely got settled here.
Yeah. And are you missing Hawaii at all, or not yet?
Yeah, you know what? I mean, I'm still running along the beach. The beach is like 30 yards that way, but it's cold. I haven't got in the water, and I've learned to put on thermals now again. And I mean, it's healthier, longer term option for us. But of course, we're going to miss Hawaii, and perhaps when things settle down with traveling so much, it will make sense for us to return.
Yeah. Well, that I had told you my middle son had moved out there and is living on Kauai. And when we were there this summer, he said that, Dad, I'm never leaving. He says, we love it here. We're never going to leave. My kids are going to be raised here. And then I got a text yesterday saying, Dad, I was just offered a 50 grand bonus if I, up my salary by 50 grand if I would come back to Chicago. And I'm like, okay, why did he send me that text? If he's never leaving, wouldn't he just not send me the text? And I said, son, you need to be careful. And I said, your mom is over here about to pass out, and she's jumping up and down and about to cry, because she's going to have her grandkids back. But then I had to tell her, calm down. This is not, you can't know that he's coming back. So we'll see what happens. But so it's 4 after. And I want to thank Patrick. I am a guest host today for the GOB Network's Capital Raise weekly meeting every Wednesday at 1 o'clock Central. And as a guest host, today was supposed to be a networking day, but I have a very special friend that I asked if he could sit in with me and just have a casual conversation as if it's just the two of us talking. And that's Mr. Patrick Grimes, which I was going to say is from Hawaii, but we'll amend that to California. And I want to start just by the way I, typically have a conversation with people that I've not met before, Patrick. And I think this would be maybe a great structure for you and me today, is as if I've never met you, and what would I want to know about you, and how would we do that? And before I go any further, I need to make sure that not only are we recording, but is Vinky here today? Anyone see Vinky? Okay, no. Let me see if I can do this without crashing the system here. We're going to try to go live on the internet. Okay, so again, I'll repeat, Jim Biggs, guest host for our regular Wednesday capital raise meeting for the GOB Network. And as guest host today, I invited my friend Patrick Grimes to sit down and have a casual conversation with us, and let everyone get to know him as if we were meeting him for the first time, and trying to build a relationship and get to know each other a little bit better before we started investing in big deals together. So typically the way I would do that is I would ask Patrick, tell me about you. Give me your life story in a short synopsis. Where were you born? Where were you raised? If that's different, brothers and sisters, what was your family life like? Mom and dad, what did they do? Were they entrepreneurs, or were they working class people? And where did you go to school? What did you study? What did your W-2 life look like? And lastly, well, not lastly, then are you married? Do you have children? And then lastly is, why are you interested in real estate? How did you get involved in real estate, and what are you doing in that space? So I'll turn it over to you and let you give us your life story.
Well, I feel like with that kind of intro, I feel like I should be laid out on the couch and relaxed with a little fountain, and then spill all the beans, and you're the little notepad writing things, right?
Yeah.
I obviously don't have any experience doing that. Yeah, so thank you very much, Jim, for reaching out. Happy to jump on. Didn't really know what to expect, so it seems like it's going to be pretty easy. Yeah, so my dad was in the Air Force, so I was born in Italy, actually, and we spent some time jumping around the United States, spent some time in Florida before we ended up in Northern California. I grew up in the mountains, Southside Yosemite National Park, so I'm a mountain boy up there, and got into high tech stuff pretty young age. I mean, I was building electronics and Legos, so I got turned nerd, and I kept true pretty much for most of my career to that. Went to mechanical engineering school and started with machine design, automation, and robotics. So I mean, it's still working great for me. And during COVID, I pivoted entirely into automated test kits for COVID diagnostics, and I had 2 record years on that side. So in parallel with that, though, the first manager that I had in engineering said, hey, he was part owner of the company, and he said, hey, the reality is that all my money is in real estate, and I do this engineering for fun. But that's what it is. It's not a good investment. It's volatile. It's cognitively rewarding, but challenging. And I took it to heart, saved up everything I had, and invested in some what I thought to be were great due diligence, well analyzed, and solid deals, development deals in 2007. And obviously the market was never going to go down then, and you couldn't go wrong in real estate. Well, 8, 9, 10, 11 happened, and I hit south pretty hard. So I came crawling out of that, and didn't do BK, was able to go through foreclosure with negotiating debt forgiveness with an attorney, which I paid taxes on for that to Uncle Sam, and kind of dove back into my career and did a master's in business administration, master's in engineering, while doing high-tech assembly automation for companies like SpaceX, Lockheed, Tesla, doing a bunch of really cool stuff. 40 to 60 hours a week. Later, I started realizing my bonuses were coming in, and I still had the voice, you got to get back into real estate, right? So then I started looking for investment vehicles that were lower risk and in markets that were inflation resistant, right? That had job makeups which would stay true and had test of time behind them, and not speculating, not buying boats where you're just dumping money into them, but buy income producing assets, and not trying to invent a property through and development and a hope and wish and pray on the other side you have of something that's income producing, but maybe buy something that's a little distressed, but surrounded by comparables that you can renovate it to or upgrade it to. So after a bunch of that, I started buying, moonlighting essentially, the Burr method. But I had no idea at the time what the Burr method was. My head's in the clouds doing engineering work. I listened to Audible, found some books on hold investing, and I just started buying distressed and renovating and refinancing and holding. And then I did that very successfully. And I'm currently trading those up to multifamily, but that went on until I met my wife, and I decided, the reality is a lot of people that invest in real estate, they think, hey, I've got to sacrifice my free time, my hobbies, and my family in order to succeed because I have that job, right? Or I can just passively invest in the stock market and not do that. The reality is, I think that's the residential single family or wholesaler, flipper. Those are the people that are doing a job. And multifamily, you can scale, right? You can bring on more people. You can get in partners that'll help you out, and it's not all consuming. And you can even invest passively and accomplish the same goals, but have somebody else in charge of keeping the velocity of capital higher. So I had a conversation with my wife. She was there for my last closing. And at that point, we did get married, once in California and once in Beijing. And then I started taking her to some seminars, and she was there for my multifamily seminars, and she was there for my last closing in single family. And then we got into it from there. It took about 2.5 years before I got in our first deal at that point. And that, I don't know if that brings us up to date with where you're at, Jim.
Yeah. So interesting question. So Dad was in the Air Force, and you were born in Italy, which was really interesting. How old were you when you guys came back stateside?
I was in first grade, so I'm not exactly sure.
And at that time, were you speaking English or Italian?
Oh, English. Yeah.
English, okay. So born with English at base, and not and probably playground and everything was all the other kids on base, and so and mom, was she stay at home, raise the kids mom, or did she also work?
Yeah, both my parents worked pretty hard. I mean, my mom was she did things like, she was administrative assistant for a while. She was an administrator of a kids camp, so we spent a lot of time in the mountains, winter and summer camps there. My father went kind of from the high tech space as well, and the Air Force kind of pivoted it into machining, and then went into education. Was a pastor of a church a couple times, and then went on to get 3 PhDs in education and evolution and divinity. And so a very interesting childhood from that front. And now he was a educator for most of his career.
And does he teach elementary school, college, high school?
High school, and is now retired.
And now retired. Okay. And one of your first investors, or no?
They were early on investors, but at this point, I think they're off into their own set plan for their finances moving forward.
Yeah, fantastic. I know for many of us, that's the very first person we go to for the first investment to get it done. And so did you have brothers and sisters, or were you only child?
Yeah, older brother, younger sister. So I'm the middle child.
Middle, okay. And it's interesting because I don't know what your sister or your brother do, but of my 3 boys, the only one that has any interest whatsoever in real estate is the middle one, the middle guy, the one that we worried about the most, that he was, middle child syndrome, having all kinds of problems. But so where in that career path was it that boss or mentor or colleague that said, hey, all my money's in real estate? Was that the spark that started the whole interest in real estate?
I believe so. Yeah, because I didn't really know. I knew that there was more that I wanted to do than just engineering, and I was kind of searching for what that was. And he was definitely a mentor And then when he started articulating the reasons why, it made a ton of sense. And, I was interested in investing as early as I can. And so that's what started the whole thing.
Yeah, fantastic. And so your wife, you were not married in 2008 during the crash?
Correct. Yeah. We are on our 5th year now.
Okay. And how did you guys meet? At a conference? Or you were trying to get
No.
her to invest in a deal?
Yeah, so she is a little rock star herself. She was living in Beijing. She went to the Beijing Dance Academy and then worked at the Center for the Arts in Tiananmen Square, and then went to Vienna to do classical music production. Then learned about Disney and fell in love with Disney because they didn't have a lot of exposure to that in China. So she decides, hey, I'm going to kind of do a blend of production and music, and I'm going to go do animation. And so she got a scholarship to get her master's degree at the school Disney started at Cal Arts here in Southern California. So I met her while she was a student at Cal Arts, and she was doing a combination of animation and live action stuff. And we met up at a party in Studio City, and we hit it off, and things went really well. And we ended up getting married, and her dad said at the wedding that it wasn't their plan for her to stay in America. But now she works she's worked at a combination of Disney, DreamWorks, and Nickelodeon, and she does production management now. So she's killing it.
Yeah, she does sound like a rock star. So congratulations, by the way. And do you guys have any kids or plan on having any kids?
It's part of the plan.
Part of the plan? Okay, fantastic. And so circling back around to multifamily, when did you decide to go all in on multifamily? And correct me if I'm wrong, but your path in was through capital raising, correct or wrong?
No. So originally I spent many years underwriting, searching for deals, flying around, meeting with brokers. And it was eventually when I started just bringing deals to numerous sponsors. I ultimately did a mentorship program, coaching program. And that helped because I was coming from a very conservative background. Just the numbers itself, which came a little easier to me, easier even to my wife. She's math whiz. We could do the numbers, but it wasn't enough to know kind of through what has gone wrong and what will go wrong in these deals, kind of build that confidence. And so we had a number of different individuals we were bringing deals to and kind of learning. And then through COVID, it was eventually just kept showing up to the plate and doing that until one operator said, hey, look, I'm totally overwhelmed. I've got a deal in North Carolina. Do you want to come help out? And so that's kind of started my co-sponsorship career, where I jumped in there and I did the doing due diligence, underwriting, I've done all the decks for every deal, investor relations, working on the syndication docs, and I'm also a KP or a guarantor on many of those, probably half of the deals that I've done at this point.
Yeah, so I find it fascinating because we have so many engineers in this field that I guess are either tired of their day job or like my youngest son, who had a free ride as an engineer at U of I, and then went down there and realized he couldn't draw a stick figure and got washed out and had to start over. But apparently a lot of dissatisfied engineers. And so it would make sense that you would fall right into underwriting, having an analytical mind, and being very comfortable with spreadsheets and stuff like that. And so talk about your personality. You do so well at raising capital. It just seems to be so natural for you. And many of us struggle with that. I find that it's the hardest part of the business for most people, that they are so uncomfortable doing it, or they just can't figure out how to do it, or their circle of influence is not such that they can raise capital from the circle of influence. So talk to me a little bit about that. Are you a natural extrovert, and why are you so good at raising capital?
Well, I think everything's relative, right? I don't know if I'd go tooting my horn that I'm really good at raising capital. I've done a lot of deals, but I mean, I've raised over 20 million at this point. That's probably true. I think that to your point, I don't lead as a capital raiser. In fact, my primary job, if that's all that there is, that's not what I'm interested in. I go heavy into the details, the analysis. I'm in the units, walking them, doing due diligence, confirming the CapEx budgets and making sure that this is a real deal. I've got my own money. I'm signed on many of the deals. And I think the part of it where I'm doing all that and I believe in it, and I believe in what it can do for investors. I mean, you know, the older generations are, and the younger generations are needing to work for the rest of their lives. Their financial education just really isn't there. They're told to invest in these products that are going to dwindle down their, you know, their savings as they retire. They'll never be able to retire early or live the retirement of their dreams. And so I believe in what it does. I think that if you show them to the plate, you're working hard, you're getting after it, and you know, people are attracted to that. And when I have lots of people that have trusted me with multi-million-dollar automation projects for my career. And it's not a lot, there's not a big difference between that, right? If you show up with the right mentality, with the right solution, with the right problem, and it's something that other people are interested in as well, then they'll be attracted by that.
So am I hearing you correctly saying I'm not necessarily a natural capital raiser? I just really believe in this so much that it just comes out.
Right. Well, I guess, yeah. I mean, I know that there are people out there. I'm a capital raiser, right? And they're kind of salesmen at heart, and you know, they're looking at conversion data and stuff, and not necessarily my style. I think I'm an engineer, an analyst, a hard worker. You know, I'll work full time and go get 2 master's degrees, right? At work is easy. I think that sort of the byproduct of putting together a deal is you've got to source the deal, right? Which includes the underwriting and getting the loan and all that. And you've got to asset manage the deal. And I've done asset management on single family and on that pre-development stuff I was doing. And I'm not passionate about that part, taking something from 90 to 95% to 100%. I'm more passionate about getting these deals together, structuring these deals. And that shows up in my engineering career, because when I do custom machine design and robotics automation, I'm the guy conceiving of it and building the first and the only one of its kind. And then it goes into a facility where a process engineer takes it to completion. So my personality just lends itself well to that front end hunt, the kind of the data side, as well as the getting in there and making it all work from the due diligence and the underwriting side, and then bridging the capital side, which is the third pillar. And that's kind of just, it's part of the cycle of the business, right? You go from one to the next to the next.
Fantastic. So if you could go back 10 years, 15 years, and advise yourself about the business, is there anything that you would do differently, or any major thing that you would tell your younger self to look out for and try to really concentrate on any particular piece?
Yeah, well, if you're going far enough back, I'd say don't speculate, don't invest in land and short-term hard money loans and bridge debt and these things that'll blow up, right? That everybody was doing before 2007. I think probably a lot of the hardship that I had during that time was a great lesson for me, and it shifted the way I look at things. And I look at a lot of deals now and like, wow, that I'm never ever going to be involved in this deal, because I've seen how they can go south, and this person just doesn't get it. But I think that if I was to give myself advice way back then, it would be, hey, perhaps seek more wiser people that have seen downturns before sooner, and align your growth path with the risk, and look at your portfolio in terms of, don't put every penny in this highly risky stuff, right? And that's where I was at. And I think if I fast forwarded through my single family career, I was kind of like, it's my own money, let's just do it all myself, right? If I make mistakes, it's not a problem, right? And I'm busy, but I think that had I thought a little bit bigger and considered that I don't like doing all the jobs, I'm passionate about all the jobs, and these commercial assets, if I partner up, they're more lucrative for everybody, and they're lower risk, and they're so lucrative, you can bring on people with decades of experience, of track record of success, right? And property managers that are on site. And I think I'd probably, because I got little bugs in my ear saying, hey, why are you only doing single family? You should be doing large multifamily. I just, nah, I got it. I want to keep control. I think if I was to give myself 10 years ago, advice, that's probably what it would be, is partner up, find the right people, work harder to find the right people, and do fewer deals, but do the right kind of deals.
And if you had the same opportunity, just let's say 3-4 years ago, is there anything that you would advise yourself if you could go back in time?
Just 3 or 4 years ago?
Yeah.
Well, no, because I had taken a break because I was with my wife and I was doing a transition. And I think that I was in the right transition.
So was COVID a great thing for you? Not COVID itself, but the dynamics of what happened because of COVID. Was that an accelerant for you in your career, do you think?
I don't necessarily think so. I think on the engineering side, it just happened to help from the assembly of COVID test kits. Those are 2 record years, one after the next. But there was a whole quarter where there was no orders coming in, so that was a pretty hard pivot on the engineering side. But on the real estate side, we'd be in deals already if that was the case. I mean, even without COVID, right? So I wouldn't necessarily say it definitely changed the landscape of deals. There's been a lot more loan assumptions because the debt markets kind of dried up, and there was a break where we couldn't do a lot in the real estate side because you just simply couldn't get favorable lending. And I was still underwriting just as conservatively before as we are during COVID. I mean, the deals I'm working on, you've got a 50% break-even occupancy, a 67% break-even occupancy. The loan to values are 60 and 70%. So, I mean, there's even in the downturn of 7, 8, 9, we only saw occupancies in B and C class multifamily drop into the 80s. So I was going into it like COVID would happen. Well, it happened. Nothing changed from the underwriting perspective, maybe just on the debt product side and the strategy there. So I'm fairly happy with the progress that we've made and the path that we've been on the multifamily side. And I think things are going along well for us.
Yeah, I think any of us would be happy to be on that path with you. So, but also wanted to know, because it is our weekly capital raise, do you think that being in the engineering world and having that network, did you play very heavily into that world to find your investors, or was it broader than that? And talk a little bit about what you've done to expand that ability.
Well, yeah. So the first deal was kind of everybody pitching in on the capital side. There was no, as well as everything else, because the reality is the sponsor I was working with didn't really need capital. He had it all. He needed help, right? And so on that first deal, it was just, hey, I've got some, friends and family. And it's true, through, 15 years of doing high-tech assembly automation, I developed relationships with individuals that did invest with me, and they still are and had before, right? And so there was very little to nobody that I think everybody had a long-term relationship with over 5 years in that first deal that invested, right? The second deal, I got a few referrals, and they were 506C deals, which means we could put out, be a little more forward-facing and share people. I've only done accredited investors only, 100,000 minimums, and 506C Reg D deals, right? So I can be forward-facing in those. And so that the second deal, I ended up raising twice, I think, what I did for the first. And I want to say that there was a couple people that were newer, some of them were referrals. And I'd say by the third deal is when I really saw sort of the machine of the processes kind of get working through, where I saw capital begin to come through more than just the one-on-one, I've known you for a while. And it was more referral based. You saw people kind of getting more attracted to the post. People are like, oh, he's done more than one of these or two of these, and now 3 of these. Okay, let's have a conversation with them. People I didn't expect to reached out. College buddies that had turned out, made it big, invested in, half my deals now, and I didn't even know, right? So And then since then, yeah, I think it's gone from like 100% to people I've known for over 5-10 years to maybe the second deal was maybe 90%, third deal maybe 75, and I would say beyond that it's maybe half, or a third, and the rest are just people attracted to the asset class and the investments that we're doing.
So am I correct or wrong in saying that it's grown by word of mouth, it's grown organically, that you didn't necessarily have a really regulated plan to attract capital?
Well, so we read every book that we could find when we started out, and I think Hunter Thompson's was probably the best book on raising capital, and he talks about putting a platform together. And me from the high tech space, well, that's easy for me, right? So we got a website. I wrote a lead magnet passive investor guide. You can check it out. It really has all the graphs in it I was telling you about, recession resilience and all that stuff, and all the benefits of commercial multifamily. We got the CRM, so we could at least bring people in and share our deals, our friends and others, right? And then we started going forward facing, putting things on social media. People would find us, register for our webinars, and so that did attract. And then we sent out emails, put out some blogs. I've got an Amazon #1 best-selling book I contributed for that you can find on my website. And I've now at this point I've published on Forbes twice, with my third one coming out next week. And there's a PBS episode that I'm going to be doing later this year. And I was just in Bazinga and a couple other articles that I'm beginning to write. So I think that the intention is to really get yourself out there. And as people find you, they'll look at you and kind of spy on you for 3 or 4 deals. And at that point, they may reach out one day, and I'll look at my CRM and I'll be like, whoa, wait a minute, you were there for like 3 webinars. And I'll start out the call, hey, you've been spying on me. Like, I love doing that, right? I don't know why, but it's really cool to meet people that really like hung out and were interested, and then finally came around. But that happens it's a know, like, trust built over time.
Yeah. And if you were to advise a young person that's, they are going to concentrate on trying to raise capital, but they don't necessarily have the network to do so, are there any particular, could you draw a path for them, and what would that look like? Any particular tools that you would recommend for them that, hey, first off, you've got to get a website, or you should do this?
Yeah, well, I mean, when I started out, I just basically did to the T what Hunter Thompson wrote in his book, and his it's Raising Capital for Commercial Real Estate, I think is what it's called. And I've numerous people have asked me, and I said, just do everything he's got in there. Just do it all, just exactly the way, and I think I'm pretty lighter on the social media, constant posting than some others, but you definitely need some kind of platform. You need a website. You need to create a brand. Who are you? Share it, and why are you? People care about that. They invest in the person, because you got to think of the private placements, these private equity, they're not audited. So you come automatically, right, with this, this government, this fiduciary kind of audit, agency coming in, like you do in a REIT. But the REITs are really bad investments. They're every penny coming is taxed. They're diluted. They're under a ton of pressure to spend a lot of capital. It's a terrible investment, right? But make it easy for them to trust you, to know, like, trust you, because that's really what it is in a real estate private equity, because they don't have somebody going behind the scenes and auditing you. And so you'll find, I think, that they invest into the person and the asset both. But if the person's not there, they're not going to look at the asset. And what I'm learning is that the more that I get myself out there, the more that know, like, trust happens without me having to do 100% of that one-on-one.
Fantastic. So I want to open it up a little bit, Patrick. Is there, well, first off, let me ask you, what's the a question or a couple of questions that I should have asked you that I didn't?
What my favorite color is? I think you were pretty good, Jim. Nobody's ever gone through to like my childhood like you have before. So I think I've answered it all at this point.
Well, then I'm going to guess your favorite color is green.
Yes. How do you know that?
Well, it's my favorite color, and it's not necessarily because of the money, but that doesn't hurt.
Well, my 40th birthday is on St. Patrick's Day coming up, so that might tell you a little bit. And if you can't see it, but my eyes are a little green, so it turns out there's a couple of different reasons why I like green.
Yeah, same here. So I will ask if anyone on the panel wants to ask questions. And I don't know, I've seen that Vinky came in. She knows I'm not high tech. So if we have any questions coming from the internet, anyone just step forward and ask Patrick whatever you want. It's just a casual conversation with friends, and we're getting to know each other. And Rick wants to know, how much was your first raise?
Yeah, so specifics on financials within deals and what each partner does are traditionally not shared, but it was between $500,000 and $750,000.
And Patrick, was that first one the hardest one?
Well, the first one was terrifying. The first one, because I had actually flown around, looked at, like they say, hundreds of deals. I had underwritten deals. I had even started raising capital and gotten to the point where we had the private placement, and we were, a couple different deals before we walked away. So I had a lot of money invested in a lot of deals before one. I was like, wow, this one's really happening. And I just did every single thing that I was asked to do, that I found that could be done without asking. I just did it. And so that one was just a dash to the finish line. It was a lot of work. It was terrifying, but it went well.
So I'm going to keep asking questions if no one doesn't, and I guess I should change my screen so I can see if anyone has their hands raised. But I still find it terrifying, every single time. And I do have a strong belief that it's the thing that most deals that don't happen, it's the biggest reason they don't happen, and the biggest reason for failure in trying to move things forward. But having said that, I also believe that it's the fastest way to success. It's the fastest way to get on a deal, because every deal needs capital. And if you can raise capital, or you're comfortable doing it, then you can get in a deal as soon as you want to get in one. There's someone out there that needs money every day. But Rick, go ahead and ask your question.
Yeah, my question is more basic. So in terms of the processes, what are the different stages that you take a contact who has been coming to you, just watching you, versus to the point where that person is qualified and gets into a deal? Do you classify, does your CRM, or do you have a process to take them through these different stages?
Well, our stages are, so you have investors that you are just in your database. You have ones that you've spoken to, right? And then you have ones that have registered for the webinar, ones that have attended the webinar, ones that have put in a soft commitment, right? And then ones that have actually are pending investment invested. I think really those are our stages. And it's not super, I'd say it's not super complex. We do tend to, ramp down emails if they've registered, and then try and make connection if they attended. We put polls in the webinars so that we know if they're looking for questions. You try not to harass these people. Like I said, a lot of these attendees are just spying on me for 2 or 3 deals. And the reality is, I've never had trouble closing a deal because of capital, and I've never been needy for that. And I think that's just how we structured our partnerships. Everybody brings more than just capital. And so I caution people, Jim talks about, well, bring capital deal. I caution people all the time, your primary job should not be capital raising. And my primary job is never capital raising, because then you're on the hook for potentially operating like a broker dealer. And so, but to answer your question, when you get on the phone with the investor is when, on that first call, when you've had that conversation, is when you can kind of structure what it is they're looking for. Because I really want to know who they are, what they're doing, I'm an accredited investor only fund. So I typically ask what their net worth is, how much I don't ever, and the reason why I'm doing accredited investor only is because I feel better being a smaller percentage of somebody's net worth, right? I want this to be a well-diversified. I don't want people to be in the situation I was where I put everything in the first downturn into a highly risky deal, right? I may really want to do it. And I may say, hey, this isn't the right, my minimums are too high. Find somebody with a smaller minimum, right? But I'll see where if they're younger and if they're leading towards accelerating their escape from retirement, well, that's a very different conversation, right? If it's somebody that's really concerned about inflation, well, that's a fear-driven motivation. That's a very different conversation, right? Somebody that just hates taxes, or a combination of these three, or if they're right approaching retirement or during retirement, well, these are people that are looking for income generation, asset protection, legacy wealth building. Well, that's a completely different conversation. And so it's more about meeting them where they're at and getting that relatable, we're all human trying to figure this out. Where are you at? This is my experience. I'm not a CPA, financial planner, attorney. I'm a real estate dude, but I do some engineering stuff and I'm educated, but the reality is that's all I know. And this is kind of my suggestion, but I can't give you advice, right? You need to talk to your own team, but here's some things out there, right? And so I think that's kind of how I approach it. And kind of that, like you said, how do you tailor it?
So Wakefield has a question, Patrick. He wants to know, first off, thank you for sharing your story. But do you suggest building your website, your brand, and the content before you start raising? And any tips on how you put together your content and what software platforms or other tools do you use?
Yeah, and so this is where I think Hunter Thompson does a really good job, because in his book, which again, everybody should read that if this is anywhere, if you're interested at all in ever doing this, because the systems and processes are important in every business and everywhere in every business, right? And you're talking to an engineer. So I've heard some people say, oh, start in Excel or blah, but no, just don't do it. I know somebody who's actually raising a ton of money and all he uses is a notepad on his phone. And I'm just like, what? Don't make things so difficult on you, right? There's very inexpensive platforms like Active Campaign, for example, that are used by some of the bigger gurus out there. And they allow you to very quickly put in deal stages, very quickly upload, put in lists, segment the list, and tag people based on calls. They allow, they can, if somebody set up a Calendly appointment with you, you can automatically create an entry. You can send them here's who we are in a 4 or 5 drip email sequence. And then they can start getting your educational content. Like hopefully you're doing blogs, educating people and contributing to bringing value to them, as well as deals and saying, hey, here's what I've got going on, right? And so that if you set that up right away, then your life just scales and becomes a lot easier. If you're trying to do this later, you're busy when you're doing a deal. For me, it's all hands on deck. It's super challenging. There's tons of stuff to do. This is not a get rich quick scheme. You want to get all this stuff set up in advance, right? But don't be like the analysis paralysis guy. I struggle with that too, right? Set your goals, set your timelines, and just make it happen. It'll never be perfect. On the website, man, if you go to my website right now, investonmainstreet.com, I started with a video of me just talking about investments. Like, this is who I am. I'm an engineering guy, and if you're frustrated with the, whatever, the market and blah, 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 we've got investments for you, right? Just be authentic and honest. Tell your story. I've got a couple steps of how things work on there. It's an old school website. It's not $1 billion REIT website. I'm not trying to look like that. I'm trying to look like authentic and transparent, and I just tell my story and build on it over time. I started putting some real cool stuff on there, like, hey, I'm a Forbes author now, and this and that, but at the beginning, it was just, pretty short little website. Didn't even have a portfolio page, but I had an opt-in with a lead magnet. The lead magnet is something you created, which adds value to their life and attracts them to give you their name, phone number, and email, right? And that's how it all begins. And that's just kind of the basics of what you might want. Did I answer all the questions?
Yeah, Oleg had a question, but I think you just answered it without us even having to ask with Active Campaign, and don't rely just on an Excel spreadsheet. and of course, a website. And there's many other pieces out there, a lot of other tools to be used. But I wanted to ask if what is the importance of the phone call?
Well, so if you're a 506B, Reg D 506B type of offering, then you would require a pre-existing and substantive relationship with the investor. And until then, you actually can't share that you have a deal. So various attorneys will say, what does pre-existing and substantive mean? Your attorneys probably find 10 different definitions of that out there. But the phone call is critical because, that is when I believe that in a 506B world, which I've never been, I've only been a 506C accredited investors only, but I believe that is when you can finally get to know them, put notes in your CRM of who they are, what they're doing, their net worth, if they'll tell you if they're accredited or not, and what are their plans for retirement and for wealth building, and are you a good fit, right? And how, right? And I think all those things are important because they're real people and you want partners for a long term. You don't want a one-hit wonder that was a bad fit. You're married to these people for like 3 to 5 years. This is your one chance to vet these people, right? And there's plenty of people out there, you don't want a bad fit. And so for the 506B world, that to me is when the gate for now you can in your CRM tag, probably, which I've never done, right? Pre-existing subset. Now you can then introduce them to deals as they come up. And my understanding is if you're not, but in the 506B world, the call is, you don't have that checkbox where you have to have a pre-existing or substantive, a C world, 506C world, you don't have to have that pre-existing substantive relationship. I want to know on that call, I want to know all the things that I described earlier, right? It's still the same. Am I a good fit? Are they sophisticated? Should they be doing? Do I think they should? Do I want to partner with them? And why? And I put take all those notes and I put it in there. And then when I find deals that may fit them, I text them, hey, last time we spoke, you wanted a deal like this. It was higher cash flow, higher tax advantages, or not high tax flow, but big yield. And you wanted this and why, right? Or it's a 1031 exchange opportunity. I just published in Forbes on how to do 1031 exchanges. And I just did with Angel, I just did a 1031 exchange, like full on webinar thing yesterday. And so right now it's a big focus for me is helping people that want to get out of single family properties and trade up portfolios into multifamily deals. And I think it's what I'm doing. And it's what a lot of people that want to live their retirement without tenants, toilets, and trash, and want to see their funds scale and grow and still enjoy their life in retirement. I think that's a great option for them. So that's also something I'm kind of looking at too. So and then if you ask them other things like, do you have retirement accounts? Do you have, do you have a CPA? And I ask, are you an accredited investor? If not, I can get you in contact with a CPA. If you're 1031, I have an intermediary. If you're looking for a retirement account to roll stuff over into, I have a couple partners, right? These people know our investments. They're good options for you. And so trying to add value like that, even if they're planning to invest with me or not. But I don't have like, here's your 100 steps to a phone call written out for you. It's just instinctual for me when I have that conversation.
So my question really in regard to the phone call, not so much necessarily a structure to the call, but the importance of the call as it regards successfully raising the capital, even if it's a 506C. Do most of your investors have a phone call, or do you get a substantial amount of money just through the automation?
Well, I've had people put in soft commitments before who just have been spying on me, but I won't accept their investment until I get on the phone with them. And you're actually, it is on you as the syndicator to make sure that you're not taking the Anti-Money Laundering Act, to make sure you're not taking funds that you shouldn't be taking. So getting on the phone to make sure that you have a know, like, trust. You want to marry these guys. You believe in them. You know they're not going to be a hassle, right? All that stuff's really important. It's not like a Reg D where they're, sorry, a Reg A where it's a, there's a stock market type placement. These are people that you're married to. They're partners. You really need to know them.
So if no one's going to volunteer any more questions, I'm going to call on the class, so to speak. So everyone get ready with a question. So I'm going to go to someone strong right out of the gate. Yannick, what burning question would you want to ask Patrick?
Hey, Yannick, how you doing?
How's it going, Patrick?
It's going all right. Good to see you again.
Nice to see you too. I actually wanted to congratulate you on your recent interview, which was great, which I listened to last night actually for the first time. It was what's that podcast that you recently did?
Well, I did Rod Cleese and Michael Blancs.
Michael Blancs. It was great, great interview, man.
Thanks.
Yeah.
Well, Jim beat him out on the personal details about my innermost feelings in life and my young childhood. But yeah,
nice.
Those are all terrifying to do. But I really enjoyed it, and I had a lot of gratitude for Michael Blanc, because as running to his podcast is one of the things that was just constantly messaging, why are you in single family? Why are you in single family? And that's what did it. It's one of the ones that did it. Yeah.
Cool. Well, I guess my question would be more related to a Canadian capital raising, which I don't know if that's really your specialty, or if you know any Canadians raising capital. Obviously, there are a few roadblocks, but also a Canadian trying to do a 1031 exchange like you. I have a 1-to-4 portfolio that I would love to transition out of into multifamily. So is there any roadblocks in terms of Canadians trying to do that? Have you ever transitioned a Canadian investor into multifamily? That would be my question.
No, I was just looking for, is it CPI Capital? There's a couple that are from Canada that are just doing a great job with content recently. Do you know them?
Yes, Ava and August.
Yeah. I think they seem like great people. I don't know them too well, but they they have some good content out there about it. Now you brought up two things. 1031 is United States IRS law, so I'm uncertain. It wouldn't apply to any asset in Canada that I know of. I mean, is that? But I am not an accountant, and I'm not a financial planner or an attorney, so this is not tax, financial, or legal advice. But most of the Canadians that I'm speaking to, at the end of the day, all they've got to do is create a tax ID number in the United States. And typically, they create an entity, and they don't want to do the LLC. They want to do the LLP, because if they do the LLC, unlike us in America, they'll be double taxed in Canada. Right?
Rick, just for clarification on that too, make sure that LLP then isn't buying into an LLC, because then they run into the same issue. So it's important they talk to their cross-border accountant about that one. But if they're getting into like an LP investment, that's fine.
Yeah, so in the syndication world, they need to create an LLP stateside, right? Tax ID number. And then I use Corporate Direct. That's the same company that the Rich Dad, Poor Dad guys for everybody too. And I could go to like 5 different websites and find all the pieces you need, and then create my own operating agreement. But I just rather pay like the $350 for a Wyoming LLC to them, and just it's just all one spot, and it's just real simple. And that's typically where I leave it.
Sure, but the 1031 apparently, because the properties are in the US, right? And they're LPs. So apparently Canadians can 1031 exchange in that scenario, but I still have to dig a little bit deeper. I found some information of people actually doing it. So just wondering.
That would make sense. It would make sense, because if they're settling up the taxes stateside, then they're paying taxes stateside. And then if they're exchanging as a United States entity from one property to the next, as long as the tax ID is the same, right? They go from one tax ID exchange to another, same tax ID. It's that entity that matters, right?
Yeah.
Then when they're doing the roll up for that entity, or they're doing the taxes for that entity, it makes sense that they wouldn't have to.
Thank you.
Thanks, Yannick. So Davide, what question are you dying to ask Patrick?
Hey, how you doing, guys? Hi, Patrick. Thank you for sharing all the knowledge here. Let's see. I I feel kind of what you went through. You know, you said you spent a lot of time underwriting a lot of deals because the numbers came easy to you, and that's kind of where you gravitated the most initially. And then you're asked by another experienced operator to help out. I feel like that's where I'm at. I spent a ton of time, 2+ years underwriting a lot of deals and finding that perfect deal, and that hasn't arrived. That day hasn't arrived yet. So I'm starting to work on connecting with like trustworthy operators where I can feel comfortable bringing my investors to. So how easy or how difficult was it for you to bring or to switch your mindset from finding that deal for yourself to bringing your investors to another operator's deal and basically operating under their infrastructure, managing your investors under their infrastructure and so on?
Well, first, let me say, if you're on the GP for a deal, it's your deal. You're just as responsible for the success and failure, even from a legal perspective, from a securities perspective. It's your deal. So the part of joining somebody else's deal and it's their deal, and you're not responsible, or you're not also equal responsibility for everything working. It's kind of a misconception, I think, in the space. And the operators that treat other people that join as co-sponsors as if you're lesser than me is inappropriate, because the reality is if that deal gets under investigation by the SEC, everybody's investors get subpoenaed. Everybody is on the bench, right? Everybody's emails. So you need to take ownership over that deal as if it's yours. You need to underwrite it because it is yours, and you need to do the due diligence on that deal. I create the decks myself so that I know every step of the story of every single deal is something I believe, right? I've always created my own decks for every deal, and it takes a long time. It's a lot of work. But it's because you got to have that ownership, because it's your neck on the line, right? I mean, Bronson Hill just did a podcast with a guy who was a sponsor, and he went to prison. I mean, you got to be careful, who you partner with, and you got to make sure they know that you are a partner, right? So their infrastructure, well, I co-brand the decks that I've done with my co-sponsors, right? And I put both out there. I believe transparency is really important. And I guess some people are worried, like, hey, what if they search for their name and find out that who your partners are? I was like, well, that's the point, right? I'm not going to falsely say I'm doing this on my own when it's not true, right? And they should be able to do the due diligence on me and my partner. And I've had LPs come by and say, hey, look, can I do a background check numerous times? And typically we have a lot of background checks because I'm signing on loans, but I oftentimes have that and I pass it forward. And I've done background checks on co-sponsors and learned some interesting things about them. But hey, do you have anything to disclose, right? Now, nothing that would ever be alarming, right? But if you're investing hundreds of thousands of people's hard-earned retirement, they've spent their time away from their family to work harder and late nights. This is their college fund, or what they're going to survive on or leave to their heirs. What would you do if it was your money, right? It is my money because I'm investing in every single deal. But what would you do if you're investing as much as them? I think that's really what's important to think about.
So
Yeah.
Patrick, I want to thank you so very much for coming on short notice, and so much for sharing with us and allowing us to get to know you. And so I want to end with how can people get in touch with you? And is your book on Amazon or on your website? Let you take it from there.
Well, I just got a shipment of these in, so Yannick, yours is coming. But yeah, so if you go on the website and you set up for prospective investors, as a free welcome gift to our community or investor club, I do ship a signed hard copy of the book. And there's better people looking on here than me. There's the lead guitarist of Def Leppard, Russell Gray from the Real Estate Guys, some speaker authors, NFL, NBA coaches, players. And I wrote a chapter in the book, Amazon #1 bestseller, investonmainstreet.com. And you'll see, instead of buying it, set up an investor call and we'll talk about your goals, what you're looking to accomplish. And so if you're a prospective investor, go for that and we'll send you this. There's a little flyer in it that I put in it too. And if you're interested in 1031 exchanges, I have not only the Forbes articles out, but I have on the website a white paper that'll step you through everything you need to know for 1031 exchanging into multifamily. And if you're just brand new to multifamily, I have an investor guide, right? It's a smart investor guide, and it goes through my whole process, where I come from, having lost it all one time and kind of building it back slowly. It kind of goes through the whole business case there.
And what's the easiest way to get in touch with you? Is it through the website?
Okay, so you can do Patrick at investonmainstreet.com is my email, Patrick at investonmain and street all spelled out.com, or for an email, or you can go to my website and there's a contact us form. There's a couple meeting ways to sign up for our list, as well as a way to sign up to schedule a time on my calendar.
Fantastic. Thank you, Patrick. Just want to end with everyone that's listening on the internet. As a reminder, the second annual GOB Network Conference is coming up in July on the 13th and 14th in the great city of Chicago. And we're super excited, very, very different format. If you want to buy tickets or just learn more about it, go to the gobnetwork.com and check it out. Thanks, everyone.
Hey, Jim.
Thank you for your time.
Sorry, if you have a sec, do you want to give me a call after this?
I will as soon as I can, Hamad. I do have one other phone call.
No worries. I'm free. So yeah, give me a call.
Okay. All right. Great. Fantastic. Thanks. Appreciate everyone joining.